Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. It is an event-filled day today. We have a host of data starting from the UK GDP to the US inflation rate. Ahead of the data, Mr. Powell's testimony has been something market participants have been tracking closely. Morning, JK, take us through your expectations from the markets today.
Good morning. Before we go into that, let's see what happened yesterday on Powell's testimony. It was speech where he sounded a bit more dovish than the first part of his testimony on Tuesday. What was behind Powell's latest shift in rates was achieving lower inflation without a significant slowdown. That's keeping the Fed chair up at night. And so basically, central bank doesn't want to push the economy into a recession while focusing on inflation. Therefore, there's a more balanced approach that is the market perceiving. So actually, the central bank will make interest rate decision as and when they are needed. Is one quote that it should be hearten the markets. Powell's testimony overall has not made a big splash on investors because the rate cut probabilities have not moved much, but definitely it has also not turned more hawkish. If anything, there are more probabilities of rate cut, uh, but the timing is not something that he has indicated. So the reaction to this, bond yields have not really moved much, but the stock markets have taken it with a very positive manner. Dow and Nasdaq both rallied strongly yesterday. In fact, all the indices were up more than 1%, followed up with up moves in the Asian markets as well. Now, what is the currency market reaction is quite subdued, because each of the currencies is influenced by its own unique factors, at least for the time being. The dovish turn by Bank of New Zealand yesterday weekend the Kiwi. Hawkish shift by UK officials looking at the wage increases has helped pound to new cycle high. Euro is still holding up on hopes of workable coalition, but it's still a suspense what's ahead for it. Lower yields continue to gain. Yen and yuan steadily lower. Continued firmness in commodities supports the AUD and the CAD. But overall, if you look at the dollar index, it's definitely moving in a range and not really giving indications that we are in for a trendy move. Maybe we are already into the summer doldrum, and unless we see a move, in reaction to today's CPI, I don't think the market is in a mood to really upset the stable cable card. Now, the CPI number today and the weekly jobless claims both are important, and the latter more important because now Fed is considering more on the economy's performance, particularly the slowing jobs market. CPI number, of course, is expected to come subdued. Not a big fall, but definitely and on the lower side, as has been seen in the recent meetings, recent updates. The weaker employment report will have an outside impact on the Fed's deliberations in the coming meeting. Of course, July cut is ruled out, but September is where most of the market participants are, pinning hopes on. And some market participants do think that a rate cut just 6 weeks ahead of the election may not be something that the Fed would want to do, because that would be seen as political. But I think if the economic reality needs it, they will definitely do that. Now, as for the rupee is concerned, seems to be governed only by modest flows on both sides. Chinese yuan and oil are the external factors keeping it closer to the high end of its range. Oil had a mild correction yesterday from recent highs, but it has jumped again after the US data showed lower inventories. Chinese yuan market is focusing on the plenum of Chinese Communist Party starting on 15th, running through 18th forum, where in the past they have taken some significant decisions, particularly on the economy. Their deliberations will be in the background of the economy continuing to be weak despite various measures that they have taken so far, and also their response to trade tariffs imposed by more countries other than US. So for currency observers, of course, how yuan behaves subsequently will be more important, and that will also have some influence on the rupee. For rupee, of course, we'll also have the CPI number tomorrow. Not too much to be influencing the monetary policy of RBI, but definitely the inflation trend will be important overall for the economy. Thank you.
Thank you, JK. And for the second day of Paul's testimony, it did seem that he sounded a bit more dovish than the earlier statement. But of course, the rate cut probabilities have not moved much. Dollar index continues to move in a range, but the pound has been an outperformer. Today, of course, CPI and jobless claims will be out, and markets would be keenly looking at how the job sectors is being doing, because that's something that is closely being tracked, as the trend has been of a weakness in the job sector. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.